Setting up. Okay. I see you. Hello, John. How's it going?
Hey, Miss Patricia, doing great.
Yes, so
Keeping busy that's for sure.
yes, it's the last day of the month. I know it's a busy day for you guys over there at Mortgage Financial Services, but I'm glad for us to be starting this weekly segment that we will be doing now with our market and mortgage updates. And I know with everything going on right now, the market and the mortgage industry and real estate and everything is changing day by day, hour by hour. There's lots of new stuff constantly
Yes.
hitting our news feeds. And so I wanted to start this up so that we can keep people informed with some good information that they can follow and not be overloaded with all of the different sources out there that they may or may not be getting accurate information from. So I am happy to have you on here with
Yes.
me
No,
today and each week.
it's really my pleasure. And no, I think it's smart. Fluid is probably the best way I can describe this market right now. You said it's changing hour by hour, and I can almost say it's changing minute by minute. That's really what it seems like these days. But no, I think it's super important because these are challenging times. These are not normal times by any means. And for those of us that are in the real estate and housing finance world, it's important to have accurate information. So, I mean, the worst thing people can do is jump on social media and panic. And then guess what happens? We wind up hoarding toilet paper. And the people that legitimately need toilet paper are in trouble. So no, I think it's great that you guys are putting these on and have asked me to participate.
Well, we're seeing a lot of stuff in the real estate industry. We're seeing a lot of the agents are having, terminations sometimes with contracts, and sometimes that's just due to people being scared, and sometimes it's legitimately due to something having changed with their qualification on a mortgage. We're seeing things extended, so that they can rework on things to get the loan back in place or things like that. So I really just wanted to come on here and kind of get an update for where we are today, maybe address some of the things that buyers should be a little bit more cautious of or aware now when it comes to maybe an existing loan that they're already in the process of getting or mortgage. And also then if they're looking to start buying and starting that path to purchase and the pre-qualification and all that, what things might be different right now than what we've seen over the last recent months.
Right. No, absolutely. And before we get into that, I'll kind of give a brief version of kind of what got us here. Really what in my 22 years in the mortgage business, this is now like my third or fourth once in a lifetime event. What I mean by that is, we had the great housing crash and recession of 07, 08 that carried into 09, 2010. Before that, we had 9/11 happen. Prior to that, you had the dot-com bubble burst, all of which had major impacts on the economy and left people for a short weird period of time in this period of uncertainty where things kind of grinded to a halt almost. This is definitely different. There's similarities to the previous housing downturns that we've faced, but this is definitely something different. 10 years ago, you had the recession was kind of brought on by too loose of credit. And here, this is not it wasn't a economic issue that caused this pause in economic activity. This is a global pandemic that's having an impact on the entire world. So, it's here. It's challenging. We're facing it. But it's not also an impossible time. We will get through this. In the previous once in a lifetime events that we've all faced, we got through them. And I think that's, that's far probably the most important message that I can get or give is that, stay focused, stay positive, hunker down. And, what I know that is just as contagious as that virus is also hope. and we will get through it. So just to kind of jump into some housing issues, probably one of the biggest questions that I get right out of the gate is, I hear that rates are at 0%.
Yes.
From consumers and even some real estate partners that are out there too. Yes, a couple of weeks ago, the Federal Reserve came in and they made their Fed overnight lending rate, they backed it down to 0%. Really has very little impact on consumers whatsoever. What did happen though is that mortgage rates did come down, but not to the extent that they that were brought on by the 0% Fed rates. But mortgage rates did come down at like a record pace, and we did hit some all-time record lows, and thousands of consumers were able to lock in those low rates. But then what happened? The speed at which mortgage rates dropped actually kind of broke the financial system. I mean, the sheer velocity of how quickly those rates dropped. I mean, you're talking about coming from 3.5 to 2.75 overnight, and then breaking the system, and then rates going from 2.75 to 4% overnight. So rates dipped and they came back up. And so the market broke in terms of interest rates for consumers. And then what happened? Well, then so you had the mortgage-backed security market kind of scratching their head, going, "What in the heck just happened?" Well, then these shelter-in-place orders came in, and then people, were not going to work all of a sudden. And then Congress is coming out and saying that, hey, we're going to have these forbearance rules that are going to say that, consumers aren't going to have to make their mortgage payments for 6 months. And so now what you've kind of created was any investor that was going to purchase a mortgage-backed security, which creates basically sets market interest rates for consumers. Well, now if you have no buyers, you effectively have zero money to lend.
Right.
And if you don't have people lending, the only way to entice people to buy these investments are to lower the price and raise the yields. So rates came up a little bit. Well, then what happened was then the Federal Reserve came in and the government started buying mortgage-backed securities. And what the government did by buying mortgage-backed securities was they actually set the reversing course too fast. And while mortgage-backed security prices went up, which is under normal times is good for consumers, in this case, it never got back down to consumer rate sheets. And so now we're kind of stuck in this very strange time where the government is really the only person buying mortgage-backed securities. And because of that, we still have rates that are very low, but they come at a cost to consumers in most cases. Consumers are going to have to get used to paying points again. It's just a fact of the. It's just a part of the cycle that we're in right now. What does that mean is that for our real estate partners that are out there, we're going to have to be getting, requesting, and negotiating with sellers of homes for seller concessions to help offset the increased closing costs that consumers are going to face right now. But again, like I said, it's still an amazing time to buy a house or even refinance for that matter, if you can and it makes financial sense today. For people that are on the boat about refinancing or not, my advice would be, you're not going to miss a boat because mortgage rates are going to stay low for a very long time, given all the impact that's happened on that's happening to our economy. But one of the things that is changing this week, and it kind of started last week, but now it's changing this week, is lower credit score consumers are having a more expensive or difficult time to obtain financing. And it's not the government, it's nothing more than sheer market forces that are determining that. Because again, think of all the other things that we have in place, forbearance rules coming out, people that are possibly losing their jobs or already have lost their jobs and aren't going to be able to make their mortgage payments. So loans that are deemed riskier in the credit pools, people don't want them. I mean, people don't want to invest in them right now. So my advice there is for any consumer or real estate professional that has a consumer, my suggestion is to find and work with a local mortgage professional. Bless their heart, some of them are great, but I think now more than ever, it's important to work with that local person that is invested in your community. And you don't have to meet them face to face. You could do this. You could do Zoom or FaceTime or telephone or snail mail if you need to. But work with a local mortgage professional to actually look at your overall profile as a consumer and find the best course of action. If it's for a refinance, we go like, okay, well, if rates hit this percent, then I think then we want to move forward and we'll just watch the rates for you. If it's buying a house, well, hey, your credit score might be at a 619 right now, but if you could do these two things, then we can get you over to a 620, and that's going to help you with pricing on getting your mortgage. So it's a combination of factors, but I think it's definitely working with that local mortgage professional that's going to take the time to sit down with the consumer and truly analyze the whole picture to find what's going to be the best financial course of action for that borrower. So, I mean, that's I could go on, but that's kind of it in a nutshell, so to speak. The hard part with mortgages is there's so many moving parts, Patricia, that there's no just 30-second soundbite that you can just make it sound easy. There's lots of stakeholders in every part of the transaction for getting a borrower into their house.
Well, I think one thing that a lot of people need to realize and remember is that even though we're going through, unprecedented times, and we've never been through anything like this that we're going through globally, interest rates, like you said, they're still at historical lows.
Yeah.
They're still very, very low, and even though they're going up and down, um, many times throughout the day, lots of times, many times throughout the hour.
Yeah.
But it still is our rates are still really low right now. And so for someone that's looking to get into a house, or like you said, even refinance, there's still a lot of opportunity there. And I know in the real estate side of things, our agents, for example, they're still having new listings hit the market right now. They're still
Right.
getting multiple offers on listings. I think that, we're even seeing, I don't know if you should equate it to panic buying or just simply wanting to get in before things get more uncertain than they are, but I think we're seeing that a lot of people are making decisions a lot more quickly. They're jumping into properties, because we are seeing a little bit less as far as stuff hit the market. So they don't want to miss out on a property when they do find one that they like.
Right. No, absolutely. So that's kind of the weird thing about this period, this historical period of time that we're in right now. If you have the means and the opportunity is there, it's still it is a great time to buy a house, or even refinance for the real estate professionals and the consumers for that matter too. What I think is important for the loan process is to set that expectation up front that it's going to take a little bit longer than normal. In a normal cycle, people are closing loans in 3 to 4 weeks. Right now, because there are so many stakeholders in a home loan transaction, we're recommending. I'm telling real estate professionals and even consumers for that matter, 45 or even 60-day contracts. And some of the stakeholders that I talk about that are part of this process of getting a borrower from application to keys is appraisals. What we do as a lender is we'll send out a uninterested third party to go out and assess the value of the collateral to make sure that a borrower is buying an asset that is truly worth what they're buying. And for us as a bank is to make sure that the money that we're lending on that asset is actually worth what it is. But in this period, you've got a couple of different things. You do have a lot of refinances going on, which slows down the availability of appraisers to go out and determine what a value of a property is because they're busy doing refinancing. But then you also have appraisers that don't want to enter into some houses for fear of exposure to COVID-19, or you have some sellers that don't want to let an appraiser in their house for fear of exposure to COVID-19. So again, I'm just saying that the appraisal process is taking longer right now. And so if you do have that opportunity to make application and everything with the numbers looks good, get that appraisal ordered as early on in the process as possible. Other things that are causing delays right now in the home loan process, and again, this is all just setting proper expectations. The worst thing that you could do is tell everybody, oh, it's going to be great and easy and get you done in 3 weeks, when it's virtually impossible to do right now. So this is funny. As part of the home loan process, we verify that borrowers have paid their taxes. We get a copy of their tax transcripts in most loan cases. Well, there's 4 IRS offices throughout the country that process what we call a 4506. It's the tax form that authorizes us to get information directly from the IRS. Well, one of those offices had a COVID-19 outbreak. And so the IRS wound up shutting down all 4 of their facilities nationwide. So I was on a call yesterday with our National Trade Association. So I have it from very high authority that right now there are some Treasury Department agents wearing hazmat suits that are moving fax machines to cleaner facilities. So we don't know how long it's going to take for the IRS to be able to provide these 4506s back. So we're actually having to get consumers to go online and pull down their information. Verifications of employment, also very important in the home loan process. Before we give somebody a loan, to make sure that they are still employed. Well, there's a lot of consumers out there that either have currently been furloughed, and so we're not able to close on their loan, like you mentioned. But there's also employers that are closed down. So even though this person might still be getting a paycheck, but their HR department is closed, so we have to be able to find someone that can actually give us that verification of employment. Let's see. So you have county deed offices that, if they're running on skeleton crews, then ordering title is going to take longer. Same thing with surveyors, inspectors, all these other parties or stakeholders in one family's mortgage transaction or real estate transaction play into the mix. And so, where normally it's a very organized flow, right now it's all hands on deck. People are running at skeleton crews, and so it's just taking a little bit longer. So again, just to set the proper expectation.
Yeah, well, and I think one of the big things with that, obviously with setting the right expectation from the beginning, but what's even more crucial than ever now, it's always one of the most important parts of any transaction, but right now is communication.
Yes.
And that open line of communication between all of those different parts of the transaction. And there are so many moving parts and so many different people that are involved in a real estate transaction. And that's one thing to play on too, with what you were talking about, having that local lender, someone how to reach them, where they, what the best ways are to stay, in good communication with them, and actually have that open line of communication is key, because as we go through this, there are so many different things that can change so quickly. And so setting the right expectations up front, but then keeping a very consistent open line of communication with everyone, and everyone also understanding and being forgiving with the process, that there could be changes and that there could be things that get delayed, or that need to, adaptations that need to happen along the way.
Right. No, absolutely. A local licensed mortgage professional is what a consumer should be talking to about their financial situation, and same thing for realtors to be looking for partners to do transactions with. It's funny. Can I steer off a little bit to the
Go for it.
to the realtors or to our real estate professionals? I know that this is a really difficult time for well, everybody on the planet. I mean, we've never faced anything like this. But I don't want people to get discouraged. Um, Prior to the outbreak here in the US, real estate numbers were at uh, basically record highs. Inventory was still tight. I mean, there's a ton of demand out there before Corona for people wanting to buy homes. And, once we get through the hump of this and we start coming out on the other side, there's going to be a lot of pent up demand to buy houses again. That's not going to subside. And I tell you what, there's a lot of folks that are that are in stay-at-home orders right now that are in 600 square foot apartment complexes where they could hear their neighbor coughing through the walls. I think the psychology is going to be there that what, if you were going to have to shelter in place, would you rather do it in an apartment or in a home with a backyard and a pool? Right. So there's
playing on that, a lot of different things can come out of this scenario. So people will find out how much more they'd rather be in a home, or with all of the sheltering in place, they might legitimately need a bigger home with more bedrooms after staying at home for a long time, or maybe they'll be stuck in a house for so long with their partners that they'll need separate houses after this is over. So lots of opportunity for real estate.
So owning a home, is truly the best financial investment that a consumer can make. I mean, I believe that to my heart. No, I'm not a financial planner or anything like that, but I just see it. You're either paying your mortgage or your landlord's mortgage. I mean, the simplest way I could put that is right there. Every check that you pay, every mortgage payment that you make, you are buying, and you are kind of putting yourself into a forced savings position by paying into equity and building your equity versus, paying rent where that, rent's going to go up every single year. So, and you're not earning any equity over here. So owning a responsible home ownership, I should say, is the best long-term financial strategy for any consumer that's out there. So, again, while you're sitting at home, I can't think of a better time than to actually talk to that licensed local mortgage professional or real estate professional to see, what are my options going to be in 3, 6, 9 months? If there are things that people do need to do with their credit, well, have that local professional look at it, analyze it, and put you on a path to be where you need to be. I think it's also important for consumers and real estate professionals to know also that it doesn't cost a consumer anything to talk to a licensed local lender. I mean, pick up the phone. There's no upfront cost, so it doesn't harm you at all. So if people are out there sitting in their apartment and shelter in place right now, pick up the phone and find a trusted referral partner of a real estate professional.
On that note, real quick, if they pick up the phone and they want to reach you, what is your number?
Okay, my number's easy. I give it my cell number. It's area code. I am from San Antonio, but my area code is 817. So I've had the phone number for 20 years, so I'm not going to change it. But it's area code 817-247-4766. So people want to, text me, call me. I'll be more than happy to give them my honest opinion. There's some people that aren't ready to buy a house. And so I think it's, again, everybody should be looking at buying a house as part of their long-term financial strategy. But maybe they're not ready yet. So, we'll put you in touch with a licensed professional that will walk you through and help you develop a roadmap for success.
Right. Now, we've talked a lot too, or you've hit on refinancing, and yes, maybe there's obviously a segment of the market out there that's in a home. They love their home. They're happy. They're just realizing they're spending a lot more time at home. And even when any of the stay home, ordinances and stuff are gone, it would be really, really nice to have a swimming pool in the yard. We've been talking about
It sure would. I mean, I look out the window today, it's like beautiful blue sky. I mean, who wouldn't want to be sheltering in place with a Mai Tai, by their pool
go
right
out
now?
in the backyard
So,
and hang out in the grass, but it's not as much fun as going out in the backyard and hanging out in a pool. That's for
yeah.
sure.
It's funny. I think you're really onto something there. I think through this process, I mean, consumer behaviors are going to change. There's no question. I mean, the great savers, the generation that went through the Great Depression in the late 20s and early 30s, their consumer behaviors changed. And I think for folks that do own a home today, maybe they're comfortable with where their payment structure is at right now. Maybe they don't want to go and move up and buy into a bigger house in order to get that pool. Well, there's financing options for, being able to take advantage of record low interest rates and, be able to finance putting a pool in their backyard, or doing home improvements and renovations. Those options are absolutely there. But I love the pool idea. And
Well, I think we've talked a lot about this, and we've actually already put in place with a few homeowners the ability for them to get in, do a refi, and lower their mortgage payments enough by lowering that interest rate, the new interest rate, that they're barely even noticing the amount of the pool being added in there. So it's not making a huge difference on what the overall payment is because they're able to lower the interest rate.
Yeah, no, it's funny. I mean, every scenario is different, but for sure, in many cases, that's true. I mean, that can really happen. Now, start going in and saying, I want the $100,000 with pool slides and lights and fire and everything else coming out. That one might cost a little bit more, but there's definitely good options for everybody right now. And yeah, again, going back to that consumer behavior, I think people can. My wife and I were even talking about this last night. It's basically like, well, basically 2020 is like already over. I mean, we're not going to Disney this summer, that's for sure. Or gosh, I mean, even my second guessing, renewing my SeaWorld pass because it's like, are you really going to be going out and being in large crowds during the summer? So
yeah, even if the public places and the public pools do open back up in time for summer, I don't know if that's really where most people are going to want to be. So
it's going to be in the back of their head for sure, and so, yeah, I mean, having your own pool in your backyard, I think is an awesome idea.
well, obviously it lasts for a long time. So it's something you can enjoy year after year after year. And while there's traditional financing for swimming pools, obviously you can pay cash for a swimming pool, but you can also get a third-party financing for a pool and just have it as an additional payment. But the option of doing the refi and rolling it in and having it at a low interest rate and not having to put everything down on a secondary loan really is a cost-effective way to do it, and you're able to spread that pool payment across 30 years or whatever you refinance your mortgage at, and it really makes a much lower impact on your monthly payments to do it that way.
Absolutely. And again, that kind of shifts back to where I think it's important to talk to a local professional, because it costs the consumer nothing. And, really, there's so many different options for doing that. It's like, okay, here's option A, option B, option C, option D for a consumer to do anything with their home loan. And, the important thing for consumers to do is to get lots of options and then determine which one makes the most sense for them. And so I guess it's where it comes back to talk to a local licensed mortgage professional to figure out what's best. And then also, same thing too. There are programs as well, Patricia, where, and this is for the real estate community to know, where, okay, these people, you have a family that finds the house they love, but big backyard, but there is no pool. Well, there's still financing options available to buy the house and roll in the cost of the pool into one. So it could all be part of the same transaction. So yeah, options are out there.
There's lots of options, yes. And so that's what we are now calling our stay home, swim safe program, right?
I love
So
it.
whether
Hashtag
you're
swim safe.
swim safe, so whether you're refinancing it, adding it into the mortgage, a new mortgage on your existing home, or whether you find a house with the perfect backyard, which we have agents that can help you with that. That doesn't have a pool yet, you can still look at having it as one mortgage payment with the house, with the pool. You can stay home. You can swim safe. It's a lot of different options out there. So, but again, like you said, it does need to, you know, they need to look with their local lender. They're obviously, you know, when someone selects an agent to help them find a house, they're going with someone local. You want someone that knows the area, you know, and that can help you the best with your specific scenario. And it's the same thing with a lender. So the more you can have someone that's really looking into what your scenario is and pulling different options for what you can do, the better off you're going to be with it.
Absolutely. Absolutely.
Okay, guys, so that is our weekly market and mortgage update for today, for this week. So if you've got mortgage questions, John Hudson, Mortgage Financial Services, is ready and available to help you. We will put his number down in the comments again. I know, John, throw it out there for us one more time.
It's area code 817-247-4766. And
Got
that
it.
is my cell phone. So just call me, leave me a voicemail, or shoot me a text, and we'll chat.
Perfect. And if you guys have any questions about swimming pools, I'm your go-to for that. So you can call or text me 210-834-7054 anywhere in almost the whole state of Texas, definitely all of South Texas, but my family owns, I don't even have lost count now, a handful of the swimming pool companies around here and have been building pools since 1954. So when it comes to building your beautiful backyard oasis, we've got you covered. So reach out to me. Let me help you get that process started. And if you need an agent to help with finding a home with that perfect backyard, you can reach out to me, same number, 210-834-7054. We've got a handful of agents at ZNR Realty who are smiling and moving, making moves, and ready to help. So everyone, we're all going through very different times right now, and we're adapting, we're doing things differently, we're doing our best to stay connected and face to face with things like this. And as things change and as there's important updates, we just want to make sure that you guys are informed and that you've got some good resources that you can go to, and we want to be resourceful for you and anything that you guys need. So reach out to us. We're here to help, and we'll all get through this together, and we'll come out even stronger than we were going in. So,
Amen.
all right, guys. We'll see y'all
Awesome.
next
Thanks,
week.
Patricia. Bye, guys.
Bye.